First, I'd just like to start by thanking everybody for coming through and spending the day with us. I think to have such a distinguished turnout, I think Marvin mentioned, this is really the leading minds in the Kenyan insurance and pension space. So I think for us to be here, the whole purpose of the masterclass is around knowledge sharing. It's about coming together as a community, working together, having conversations about the topics that affect us in our businesses. I think for me, one of the key points is around, high tides float all ships. So to be able to sit here together with our colleagues, with our peers, the key distribution partners, the key actuaries, regulators, fund managers, and to be able to share knowledge like this, I think for me I think it's actually very, very encouraging. There's some key takeouts that I'd like to just talk about today. So I think the first thing was about, if we look at what are the key issues facing us when we get to retirement, there's no question longevity is becoming the key discussion point. It was the founder of the Singularity University, Peter Diamandis, who was saying, we are 10 years away from cracking the actual code around longevity. So when you think about longevity, he speaks to, we either have a hardware problem or a software problem. If you think about what are the causes around people's mortality, it's either your body fails or your mind fails. And he reckons we're about 10 years away from cracking that code. Now what that means is you're not talking now about living to 100. He's talking about living to 150 or 200. So if you remove all of the obstacles, all of the reasons that you may have a finite lifespan, think about what that means to your requirements for financial planning. These are unprecedented things. We've never thought about this before, but it is potentially, and this is the kind of world we might be entering into. I think the other thing that I thought was really, really interesting, and I thought Simon brought it home incredibly well, and that was around compound interest. So there's only two ways that we are going to be able to fund our retirements comfortably. So when we talked about that retirement funding gap being 34%, okay, so it's very easy. There's only two ways. Either you start saving younger or you save more when you're older. That's the only way you're going to be able to get enough. And I think the point around the younger you start saving, you unlock what is defined as the eighth wonder of the world, which is compound interest. And there's whoever it was accredited to, it has never been technically said, where it says that compound interest is the eighth wonder of the world. And the extension of that statement goes, he who understands it earns it, and yet he who doesn't pays it. So either you get it while you're young and you benefit, or you miss it and you end up paying for the lack of it. And I think as you go and you speak to your clients, the companies in which they work, the corporates in which you are the brokers for, I think they're the messages, really. The two key takeouts is that we're in a macroeconomic environment. Raphael explained it so eloquently, Simon also in terms of VUCA, in terms of there's a number of uncertainties that are taking place in the world in which we are now living. The first one is that we are living in this interconnected world. What is happening in Iran today, what is happening in America today, is having a fundamental impact on our economic well-being. When I was in Saudi Arabia, I was actually in Dubai about 2 weeks ago, and the cab that I was driving in, so the fuel price for petrol there is probably about $1 per litre. Okay, $1 per litre, and I was like, gee whiz, that's amazing. It must be so nice if that's the case. And he looked at me like I had rocks in my head. And he said, you may think that's nice, but when your standard of living is based on the fact that we used to pay 30 cents a litre, it's not so nice. And it kind of brings everything home. It's all relative. So the world that you're living in, even though you're living on the piece of land that produces oil, when an issue breaks out across the Gulf from you, it has a profound impact on your life, on your lifestyle. That's the first thing. So this interconnected world, the political issues that are affecting one country have a direct impact on you here today. The second issue is obviously around what's happening in terms of your market volatilities. It's an absolute certainty that market volatility is going to affect your retirement returns. Okay, so everybody's saying, well, you should be invested in multiple classes of assets, and you should have property investments and equities and everything. The fact of the matter is that we cannot just take a single point in time view around financial planning. We need to get to the stage where we're actually taking a very, very prudent view at the customers that we serve. Not all clients are the same. Not everybody has the same asset allocation requirements. As you are younger and you can afford the time span in terms of potential volatility, absolutely have a high equity exposure. As your client gets older, the time frame that they have in which to recover from market volatility decreases. And then you need to start shifting their asset allocation so that they can have more conservative asset classes. Until ultimately, as they're just before retirement, and that, God forbid, the market does actually collapse, or you do have a short war in Iran that takes place and the markets go down 20, 30%, you are not wiping out somebody's pension fund just as they're about to retire. So I think we're entering an era in Kenya that the industry is becoming a lot more mature. The options are becoming more abundant. And our ability to look at our clients as individuals and to be able to do prudent financial planning for our clients and to give them proper financial advice and manage their portfolios accordingly, I think that is the time period that we are entering into. So certainly we've talked about inflation, we've talked about market volatility. I think in terms of the other thing that is really impacting us in Kenya at the moment is our exposure to digital technologies. Again, as our markets mature, our access to systems and AI and technologies also becomes a lot easier. I know that we were just about out of time, so one of the things that we wanted to do is just to showcase the fact, and I'm sorry, we have to do some selling while we're up here. We have to pay for the lunch somewhere. But we are very proud to announce that we have just replaced our core line of business system for our pensions business. We have a fully upgraded Microsoft pension system that has been customized specifically for the Kenyan pensions market. And I think what we're seeing is a tremendous improvement in terms of how we are now servicing our intermediaries. It has the ability for our clients to be able to access their pension statements directly from their own mobile devices, from digital platforms. It has the platforms for the trustees to be able to enter into the portfolios and manage their trusts. You can do all of the administration yourself. So I think as we move into this digital era, certainly APA is not being left behind. We have entered into this new era. We are very proud of the fact that we have modernized our systems. I think from an RBA perspective, I think that you'll be happy from a governance point of view that the system that we have is 100% sound, is obviously robust. And I would ask you, Shem Mai, who is the head of our pensions business here, Martin Mathai, obviously our head of corporate, if you have questions, please have a chat to them and see how that could be used specifically for your clients, for your customers. So with that shameless little bit of marketing, I'm going to thank you very, very much for coming out and joining us here. It was a great privilege to be here. For everyone that I spoke to and met, it was a great pleasure. Thank you very much. Please join us for a cup of tea or a drink afterwards. It's a beautiful afternoon. And yes, thank you very much. Grace, Joyce, Grace, where are you? I can't see you. Thank you very much for organizing this, Joyce. We really appreciate it, for the hard work and effort you put into getting us all here, putting the program together. It was on point. Thank you. Round of applause. Thank you. Lastly, Marvin, thank you very much for emceeing for us. I think you learned a lot about the pensions business in your researching it, but someone got a gift for Marvin. I think he needs one. But thank you, guys.